Hello, everybody. How are you? I'm so happy to talk to you today. It's 17th of June 2025. As you can see, there is a trend down, moving down, um, bearish or bearish trend, and there is a consolidation in this area, as you can see, and there is also an H4 FVG, which is swept by these candles and these candles also, and this candle make a rejection. You can see there is a rejection against the trend and then a rejection again with the trend by this candle. As you can see, there is also an order block here with a fair value area on H1. This is an order block, bullish order block, and fair value area. So this is what is called an argument. This is what is called an argument. So this area make a multiple rejection. This is a rejection also from this area, and a rejection second one by H1. And we make a sell in this area. How we make a sell in this area, and there is an order block rejected against the trend. So we can explain our strategy here by the explaining what happening here in this area. Um, and we sell here. There is the price move from this area to here, and then move this area, and then move rapidly to the order block, bullish order block to this area, and then reject it by and making a rejection by H1 and also 30 minutes with 15 minutes. As you can see, when the price return to this area, we make a sell after see this rejection from fair value gap. This on 30 minutes. This is a fair value gap on 30 minutes. As you can see, this is a fair value gap on 30 minutes. We make a sell in this area, sell order after seeing a rejection on 15 minutes, and we will take the profit here, and we will take the profit here. Now we are in a profit. How we make this? As you can see, um, we have a special consideration that you should take in your mind. First of these consideration, um, which is the market make a structure. Market make a structure. This is structure one, two, and high, lower low, lower high, and then lower low, and then lower high, and then move towards down. So this is the first one. This is the structure. Second thing you should know that as you can see, this is one, two, three. You can see this is one. Okay, this is one, and this is two, and this is three. A 3 violate 2 and then move downward, and suddenly rejected from this order block, and make a rejection, and then return to the area of fair value gap, and then we make a sell another again, and then move down to this area. What are the consideration? The first, the main trend is down. The main trend is down. This is the first. The second thing, there is no evidence for this rejection. Why there is no evidence for this rejection? And this because this rejection doesn't make change in the state of delivery, doesn't make the price moving up. Okay, and this rejection also doesn't make the price moving up, and doesn't make also fair value gap, also doesn't make fair value gap. So the price, this rejection is not evident, and it is not significant. That's right, it is rejected from an order block because an there is an buying pressure here. Okay, but the selling pressure is more than the buying pressure. The momentum, selling momentum is more better than buying momentum. So and this make this rejection, but the price continuing lower. This is the first. The second thing, as you can see, there is a violation 3 to the 1. This is the second thing. The third thing, there is a rejection candle on 15 minutes, and and also not also rejection on 15 minutes, but also there is a change in the state of delivery on 1 minute. This is a change in the state of delivery. This is a change in the state of delivery, and also this is a change in the state of delivery, okay, on 1 minute. And this is make the rejection, and we enter here, and we enter here in this area, and the price moving down, okay. And also there is an explanation to this scenario that you should understand it. What that is, what is that? I want to tell to you that the price is in my mind to see it in this area. Why? Because there is first there is an fair value gap on, on 30 minutes. This is first because it is a bearish fair value gap going with the trend. This is first. The second thing I want to tell you, that when you can see the price, when you can see the price moving from this area, this is a selling area. The seller take its chance to sell the price, then the buying trader take a chance, okay, then the selling take a chance again and moving the price lower with the trend. But as you can see, there is a fair value area in this scenario. What that is the fair value area? As you can see, this is a fair value area. In this fair value area, there is a chance for the buying trader and then selling trader, okay. There this area is fair between buy and sell, but this leg only selling. There is no chance for the buy. So the buying pressure should take its chance to return to this area and then take the price to move downward, okay. You understand me? I will repeat again. There is a sell, then the buy take its chance, buy trader, then the price move its direction. But but this is a fair value area. Fair, this is fair value area, okay, fair between buy and sell. But this area from this point to this point, it is unfair area. Why? Because only selling. So the a trader take its chance to buy the gold, to return to this area and find a 30-minute fair value gap here. This is a 30-minute fair value gap, and then go out of the uh, go out of the market, and then the price take its direction, which is bearish. So this is a typical area for sell, and also there is an order block also in this area. And that's my explanation, and it is a very beautiful trade we make it today, in spite of the big argument that there is a fair value area, buying fair value area, fair value gap. This is argument. This is order block, fair value area, fair value gap also, and order block, which is potent, as you can see, for H4, H1, H2, 30. So there is a multiple rejection. You can see it on H4. Also, there is a rejection in this area, but this rejection is not evident and is not significant because it doesn't make a change in the state of delivery. So we make this trade today, and we are happy to reach its target in this area. Thank you very much, my friend, and I will see you later on. Thank you. Bye bye.